You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on out there in the futures options markets? Well, you tuned in to the right show. Let's find out together. Yes, it is time for TWIFO. This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. Don't forget the at the start of the URL. I'll get you to all that goodness, of course, on the old network as well. Wherever you find your favorite podcast programs, we are there. If you want things immediately in your ear holes, as well as access to 200 plus hours of awesome exclusive content, as well as access to more each and every week, as well as access to awesome pro trading crates that we only send out exclusively to you, at the complete and total consternation of many of my network co-hosts who are taking umbrage at me every day that I don't send them pro trading crates. Theoptionsinsider.com/pro is the only place to go to learn more about all of that fun. And let's learn who's joining us in the old CME Group hot seat today, shall we? I am pleased to welcome on, it's been a while since he's joined us on this program, the once future and now present Dr. Vix himself, a.k.a. Mr. Russell Rhoads, holding court over there at the Kelley School of Business when he isn't churning out options and volatility tome after tome. Mr. Rhoads, welcome back to TWIFO, sir. It has been ages. It's been almost a year.
It is. I am thrilled to be here with the Mark Longo on the Options Insider Network.
You'll never forget
I know that one was directed at me from something I did.
You may
not everything in the world's about me, but that one was.
You may have inspired it. That's all I'm saying out there. By the way, you're backing up. You're going back to back with your favorite guest, Miss Carly Garner. She was on the show last week. So there you go.
I listened yesterday. Mainly because I hadn't been on in a while, but believe it or not, because as goofy as I sound, I am a professional. When I come on one of your programs, I make sure that I have listened to the previous weeks. And as you noted, I haven't been on in a while, and that's because I was teaching during this time period at Kelley, and now I'm not. And I've gotten them to change my schedule next year, so I will never be teaching during TWIFO again.
There you go.
I will always be available.
Smart man. But yeah, Carly is always great to have on when Nat Gas is rocking and rolling because she loves herself a good Nat Gas vertical or ladder. You pick the upside trade in Nat Gas. She's probably got it on there. So she's always fun to have on. We have you to thank for wrangling her for the show. So
we haven't come up with a nickname for her yet.
No, we have not. You're right.
And I've got one.
Oh.
Should I say it here?
You can throw it out there. We'll see what the listeners think. What you got for us?
She and I have something in common. I've never met her. I've talked to her a bunch, but never gotten a chance to meet her in person. I really would like to meet her in person. We both have very similar looking beagles. So I think Carly Garner, the mother of beagles, would be perfect.
The mother of beagles. Well, I guess it's better than mother of dragons. We all know how that turned out. Spoiler.
Mother of beagle. I don't know. She's a tough one to come up with a name for.
Yeah, it hasn't percolated up for me yet. When the time comes, when the lightning strikes for me, I will know. I'm not sure if Mother of Beagles is going to do it, but hey, we'll put it out to the masses. We'll let them
obscure.
Decide. We'll let them decide. But you know what? The market gods decide what comes next, listeners, because it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group. Don't tell Lucasfilm. If you want to see this report for yourselves, you can find it. We tweeted out before the show at Options. CME does so as well. So this is one of the few super premium reports from Quick Strike that you guys can get access to. Of course, we had Nick, the creator of Quick Strike, on the show a couple of weeks ago. If you do like this data we're talking about here on the show and you want to go above and beyond, maybe take a free trial beyond just the stuff that's available on the CME website, I encourage you to do so. It's really great stuff. Bantix.com, BANTIX.com is the place to go to kick the tires and light the fires. Tell Nick we sent you. He'll be uber excited to walk you through the whole platform. He's just that kind of guy. But this is one of the few premium reports you can get access to without doing that, listeners. And if you look at the full report, it's one of the closer to 50-50 weeks we've had in a while. We've been kind of biased in one direction or the other, and we are still overall net biased to the upside now. If you look at the full report, it is, I would say, closer to 60-40, green versus red. So closer to 50-50 than we've been in a little bit. That said, Mr. Rhoads, as our guest, sir, where should we begin our journey this week? To the light side or to the dark side?
Oh, let's go to the dark side first because it's a bunch of markets nobody cares about, and then we'll move on.
Dark side, okay.
You didn't like my editorial there?
I was just distracted by other things going on here in the studio. But yes, okay, to the dark side we go, sir. All right. Number 5 already. We're right into it, listeners. One of our frequent offenders back on the charts this week. It is Bitcoin coming in at a paltry 1.54%. It wasn't on the charts last week. In fact, it's been a couple of weeks, which is interesting because, again, it's in the name, movers and shakers. There are only 3 of them. It's Bitcoin, it's Nat Gas, and it's lumber. Let's see how many of them we got in the charts this week. We got one so far, off to a good start. Number 4, we got the 30-year off 1.55%. So just barely managing to edge out Bitcoin for the number 4 spot. Number 3, the Ultra 30-year. Again, sometimes it's an interesting week when the Ultra 30-year makes it onto our list, off 1.77%. It was number 5 in the other direction last week, up 2.85%. Number 2, we got Class 3 milk, so going off to dairy now, off 2.3%. And then staying in ags for a bit of an ag apocalypse, listeners, corn. Number 1 to the dark side this week, off nearly 12%, 11.73%. My goodness, they are coming for corn today. Haven't chatted about corn on the show in a little bit. I got a feeling that might be changing today. Now to the light side we go, listeners. And actually, we're having that same issue again because if you're looking at the data, it is showing euro dollars at the top of the list. But we all know euro dollars is pretty much a moribund product at this point. So we're actually going to expand our top 5, technically a top 6. Normally we'd be looking at the E-mini S&P Mid-Cap 400 at number 5, up 5.1%, but it's actually going to expand it one more to a top 6 to include heating oil, listeners, up 3.61% this week. So that's our actual number 5 out there when you discount some of the crazy data that's coming out of Eurodollars as is circling the drain, listeners. Number 4, we have the E-mini Russell 2000 up 5.93%. So you were talking on Vol Views last week, Mr. Russell, about the return of the Russell 2000. Took a little bit of a break earlier in the week, but now roaring back to life, up 5.93%. Is this the comeback for small caps? I guess we'll find out. Number 3, away from equities and off to the energy, listeners, it is RBOB, up 7.75%. It was number 2 in the other direction last week, off 5.12%. Number 2, here is one of our frequent offenders again. So number 2, really number 1. It is Nat Gas, listeners, up 8.06%. It was number 1 to the dark side last week, off 13.09%. So we were just talking with Kelley last week. What the hell is going on in Nat Gas? Seems like every little bounce we get, they immediately come and crush it back down. We're getting a bounce again this week. Is this the turnaround people have been looking for? Are they just going to fade this to high heaven again, listeners? I guess we'll find out there as well. All right, Mr. Rhoads, we got a lot of living in front of us. We got energy. We've got equities, we've got ags, we've got dairy, a subset of ags, we got a little bit of rates, and even some crypto, sir. So what's floating your boat? Where should we start this week?
Well, let's go ahead and get energy out of the way, and kudos to Kelley. She hedged herself a bit when you guys were talking about Nat Gas, but she really did seem to be leaning toward bullish.
She did. She
lo and behold, nice. One of the great things about her, and then we'll just talk about ourselves. She does a great job of combining the technicals and the fundamentals in the commodity space. And I really feel like to be long-term successful, you got to understand both. And I can't think of a lot of people that are better than her to listen to on both across the whole commodity space.
There you go, listeners. A little bit of Kelley Garner love here from the Once and Future Dr. Vix as we keep on rolling right on into energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's do it. Let's dive on into the product I know a lot of you are watching and paying keen attention to these days. You know where to go for these reports, listeners. CMEgroup.com/TWIFO is the place to go. Once you're there, go into that asset class drop down. Go down a couple of notches to energy. Then in the product family, go down a couple more notches to nat gas. And that is where we will begin our journey this week. Easy for me to say. Listeners, all right. Nat Gas. Again, we were just talking with Kelley last week. It seems like we were going to be threatening the 2 handle again. We were hanging out around 217 in the show last week. This week, gaining 17 cents right back, nearly 8% to the upside. Again, if you go all the way back to the end of the show last week, it's up a little over 8%. So just a banger week, pretty much straight up ever since that show. I think Kelley was talking about, was it the SEP 3s on that show? Those are probably looking pretty good right now as well. But Nat Gas looking pretty good, pretty robust as well. Already more than a week's worth of volume, usually somewhere around 400, maybe 450,000 contracts on a decently active week. Already we're at 526,000 contracts and more obviously piling in. So Nat Gas looking pretty robust. Mr. Rhoads, it's been a while since we've chatted with you here on this show. And one thing has stayed the same. Nat Gas has pretty much been in the crosshairs the entire time that you've been gone. And it continues to be this week. What is catching your eye out there in the Nat Gas this week, sir?
Well, even though it had a really good week, if you look at the skew here, it appears that the puts are a bit more expensive than the calls, at least going through the end of this year. And then it kind of flip-flops going into, I can't believe I'm saying this year, 2024. Can you believe we made it to almost 2024?
Don't jinx us.
So
it is an apocalypse in New York right now.
That's the first thing that pops out at me. And what's interesting is I was teaching skew last night in my graduate derivatives class at Kelley. And the class ended up going 30 extra minutes when I was talking about different market-related stuff and talked about how I feel like the commodity space is the one that you can really get a lot of information out of skew. And what I mean by that is, are people paying up for the puts or are they paying up for the calls? And even though Kelley was targeting those the September 3 calls, it looks like there was a lot more activity on the put side. So maybe people aren't buying into this rally.
Yeah, that's been a fascinating thing for a while. We've had Carly on talking about nat gas, Dan Grams, and many others. A lot of them have been just talking the virtues of the upside. And I who can blame them? We were at a 9 to 10 handle not too long ago, and we were talking about options flow well north of that, 11, 12, even 15 handle calls. We're trading for decent size not too long ago out here. Now here we are threatening a 2 handle. How could you not lean upside in all of this? And yet, you're right. Exactly what you're pointing out is a thing that has kind of flummoxed me for some time, which is all the action, all the interest, all the bid is to the puts continuously out here in nat gas. That remains the case week after week. I keep waiting for that moment, Russell. I keep waiting for that moment when the calls are just hugely bid out here. And that's the moment where the worm is going to turn. We have never seen that. And we've been threatening the 2 handle seemingly forever out here now, sir.
Which is absolutely amazing in a market. Is this the one we call the Widowmaker?
Certainly, it would be an apt description, sir.
Okay, I can't remember which energy market it is we call the Widowmaker. I feel like it's nat gas because of some of the absolutely incredible moves that you get every once in a while. It just seems to me that, especially with all the different geopolitical issues that we got out there, that there would be there's nothing wrong with owning a few, just slightly out of the money calls. We're not talking about buying 10s or 15s. I'm talking about buying 3s or 4s. But that those would start, or maybe going to the 5 or 6s into next year, because the futures for next year are, some of them are closer to 4 than 3. But again, it surprises me, and it's not a market. I think I've never traded the options. I used to trade the heck out of the futures about a decade or so ago. But it just seems to me that you would want to be positioned for some potential upside one way or another.
Yeah.
And the fact that we see puts more expensive than calls, and when you start to go through the most active list, there's a lot more P's than C's. That just leads me to think that, I guess there's just no rush to getting long natural gas.
Apparently not. One seems much more sexy than the other. I mean, what's sexier? Like a 3 call that has all the upside, or a 1 3/4 put, right?
Now, remember, and everybody, this is my sarcastic voice, and there's an asterisk after this sentence. So don't rush off and do some sort of goofy trade when I say this. But hey, remember, futures markets can go negative.
Yes, I was just about to point that out. I remember you had a fun little dalliance with WTI to the dark side back in that very memorable April. I think you were the one I was talking to. You're like, hey, 20 cents or what's the worst that could happen, right?
Oh, I think I was on this show right after that. And I even said I didn't buy it, but I remember looking at it and going, well, why the heck shouldn't I buy one of these for 20 cents? And as I went to type in the trade, the thing went negative, and I'm like, oh, that's why.
That's why I shouldn't. I don't think we're quite there yet in nat gas. I don't think we've reached all the crazy, just perfect storm of scenarios that resulted in Russell being a keystroke away from having to live on the streets. But
lose a wife, lose the dog, lose the daughters. Girlfriend would probably abandon me too.
Yeah, she would definitely. She'd be the first one out the door.
You're right.
Once WTI goes negative, the girlfriend's gone. That's just gone, dude. That's a high expense thing right there. But yeah, intriguing stuff out here in nat gas. I don't think we're threatening the negative strike, but nonetheless, it is kind of a similar story again this week, listeners. A little bit rally, that's different. But outside of that, we're seeing robust volume and a heck of a lot of puts trading. The vol actually coming back in, so a little bit of rally to the upside. Again, that also shows you there's no bias to the upside in the skew. If there was, we'd have a rally and the vol would be up. But there is no bias. This vol is down nearly 8 points in this front July contract, which is where about 32% of the volume is going up this week. So we're going to hang out there. It has about 19 days to go. By the way, let's get some weeklies out here. Man, there's enough action to support it at this point. We could definitely imagine the 0-day frenzy in nat gas. Mr. Rhoads,
oh my goodness.
Imagine the paper we'd be seeing out there. It'd be transformative. So hey, I don't know why we're still talking nothing but monthlies out here in a product that moves this much. But c'est la vie. Vol 60, pretty much even, down about 7.5 points. The skew, it's kind of one of these coin flip flat skews. About 1% bid were the puts last week. Still 1% bid. The calls, about 0.5% last week and almost a full percent this week. So get pretty much a 1% bid in both directions. So that works out to, again, a coin flip. There is no bias, no insight in this skew as to what direction that nat gas is rolling. And that's kind of been that way for a while. Let's go into the contracts that are lighting it up here today. And I said, once again, it's puts. This time, at least it's the 2 puts. I could see a little bit more of an argument for those. That's an important psychological level. When we're on here talking about 1.5 and 1 3/4 puts, then I'm kind of wondering what the heck we're doing out here. But it hasn't been the craziest trade we've seen out here. 32, almost 33,000 of the 2 puts going up. The big day is today, nearly 14,000. So a lot of action in that gas today. 8,000 on Monday, slightly closing there, and about 5,000 to 6,000 each on Tuesday and Wednesday. It's been back and forth opening to closing all week. So the closer we are to that 2 handle versus moving away from it, the more opening and closing paper we see. Right behind it, there are some calls to be had. So it's not all puts all the time. It's just mostly puts all the time. 2.5 calls going up here in the number 2 slot today. 26,000 contracts on the week, 10,000. So almost half of that today. And then 7,000 on Tuesday, 4,000 to 5,000 each Monday and Wednesday, opening all week long. Again, kind of hard to argue against those. Opening on the 2 halves, those are looking pretty good right now. So if you were piling into some 2.5 calls earlier this week, you got a bit of a smile on your face right now. Then again, listeners, the rest of it is kind of a tale of all puts all the time. We go out to the October 2 puts coming in at number 3 here, 16, nearly 17,000 contracts. The big day for those also today. So again, today, a very active day for nat gas options. 11,000 of those 16, nearly 17,000 contracts going up today. 3,000 yesterday, 1,500 on Monday, and not even 1,000 on Tuesday. So mostly opening again on those. So 2 puts, kind of where the action is. And again, at least I could see more of an argument for those. It is a psychologically important level out there. As Mr. Rhoads mentioned, you go a little bit farther out in time, you do see a little bit more evolution to the skew, but not in the direction you might be assuming. You get out to, let's say, the D's contract. The D's future is hanging out at 344, listeners, so a wee bit north of where we're hanging out in this front July future, a little over $1 north. And we're seeing in the D's contract a slight bid to the calls, but not much. 2.6% bid. That was last week, only 2.2% this week. And the puts are kind of flat. So slight bid to the calls. I mean, I guess if you go to October, that's actually the calls are a discount there. If you go to October, we have the future at $2.50. The puts are nearly 12% bid there, and the calls are 5% cheap. So if you go to the October contract, Mr. Rhoads, that looks like we're going to fall out of bed. So yeah, not the skew setup you might be expecting out here, listeners. If you're looking for something that's going to reinforce your upside supposition, tons of bid to the upside in this call skew, we are not seeing that. And if anything, in October, it's the other way. So yeah, unfortunately, I cannot reinforce. But if you're here for some downside ammo, we got it for you. I don't know, Mr. Rhoads, what are your thoughts on these funky skews and the fact that if you go out to October seems to be kind of a beast unto itself. We don't see that kind of skew anywhere else, but still decidedly bearish in the October timeframe, sir.
Well, don't you figure October is about the time that
seasonality is kicking in then.
The demand's going to start going up an awful lot, and you know, listening to Carly last week, she was talking about how nat gas, you do need it when you're pumping the air conditioner, and for the different power plants, and people just aren't having to crank their AC quite much this year. I've got a theory.
Don't keep us in suspense, sir. What is your theory?
All this smoke coming out of Canada, which hasn't hit Chicago. It's beautiful here, but if you've got a little bit of a haze, doesn't that make the temperature go down a bit, and people aren't going to have to crank their AC?
There you go.
Canada may have solved global warming.
Exactly. Canada's taking
by burning themselves down.
Canada biting the bullet for the rest of us out there. We'll just cover the world in smoke before we have a chance the rest of the world has a chance to do it. There we go. All you Canadians, send your hate mail to Russell Rhoads, care of the Kelley School of Business. We can talk more nat gas. Anything else in the energy market catching your eye, Mr. Rhoads, or should we keep on rolling to other markets?
I'm gonna say something, but I don't want you to go to the market. You mentioned heating oil.
Yes.
Believe it or not, this comes from some of the academic work that I do. Heating oil is very correlated with jet fuel. And it is one of the products that is used for cross hedges with jet fuel. Yeah, I was at O'Hare this past week, and it was a freaking nightmare. Everybody's flying. So that might be an explanation on before we move on from energy. That might be an explanation on what we're seeing in heating oil. You're like, why in the hell is heating oil up? Well, it's the contract's not just used to hedge heating oil. It's actually used to hedge jet fuel as well. It has to do with the way they go about distilling the products down.
If you want to find those for yourselves, listeners, you pop out of NatGas, go down a few slots to refined products. We don't talk about them very often on the show. And once you click on them, you probably see why. Heating oil hanging out at a whopping 119 contracts on the tape this week. So not a ton of paper for us to sink our teeth into. That front future trading at 238. Looks like the big trade is a 50 lot of the 228, so 10 cent out of the money puts. RBOB out there, kind of a similar deal, also can be found in that refined products category. A little bit more paper there, about 1,000 contracts, but not a ton to speak of out there. That front future trading 261, up about 4.5%. And the big trade in RBOB is a 500 lot of the SEP 230 puts, so maybe a little bit of fade in action going on out there. So that's our quick dalliance in refined products, because that's really, unfortunately, from a volume perspective, all they are worth here on the show. But Mr. Rhoads, we got a big, I know it's not your wheelhouse, and quite frankly, it's not mine either, but we have a huge dark side mover in corn. I also see we have some of our live listeners asking about the grains. So what do you say we go outside our wheelhouse and take a little bit of a journey to the dark side in the ag, sir? What do you think?
I'm happy to do that, but I do want to choose the next one.
Okay, after that, you get to choose. I'll let our listeners choose now, then you choose next as we head right on into the ags, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
Welcome to the world of ags, listeners. And Mr. Rhoads, it is funny how divisive ags can be. We've had some guests come on and they're like, yeah, I'll talk about anything but no ags. Whatever you do, no ags. They're just terrified. Some people live in terror of the ags products. That is not me, listeners.
Why?
I find them intriguing, but some people, it's just not their wheelhouse. I get it. And they prefer just not to delve. Fools go where angels fear to tread. And some angels apparently fear to tread in the ags markets. You can find these for yourselves, listeners. It's easy to find. It's the top of our alpha order list. Click on agriculture, then click on grains and oil seeds. And because corn is lighting up the dark side, nearly 12% this week, we have to start out there. Click on corn. It's right at the top of the list. Where is corn hanging out right now, listeners? 609 in that front future. And again, you can find some weeklies out in corn. So once again, we have said before, for those of you out there who are considering maybe dipping your toes in the ags, you could do a lot worse than starting in corn. You get liquidity, you get some strike selection and some expiration selection that is more akin to what you're used to out in the equities, including contracts expiring in about a day. So there you go. 0 days in the ags, listeners. They have it available for you right now. Right now, 29% of the corn paper, which again is pretty heavy, 511,000 contracts. So over 500,000 contracts going up in corn. So nothing to sneeze at this week, is going up in the July expiration cycle that has about 15 days to go. So we're going to hang out there. That future hanging out at looks like about a 609 out there right now, listeners. Mr. Rhoads, I know you're not looking at NatGas. You are diving deep into the ags. Maybe sometimes on your journeys back and forth to Indiana, you might pass a field or two, sir. What is catching your eye out there in the ags world this day?
I get out of the car and measure the corn every week.
You're that guy. You take the ruler, you stick it into the topsoil, measure the depth.
I do. I measure it. And that's proprietary information right there.
That goes right into your model. Second you get to school, you pump it in.
And in all seriousness, there are fundamental traders that do exactly what I just said. I am not one of them. The thing that really kind of pops up right off the bat is you look at that the option that goes off the board tomorrow, and maybe skew's not a good number for that one, but it seems like there's a really big put bid there. And the most active, even though it's only got a day to go, are slightly out of the money puts as well. And that seems to go out throughout most of the summer until August. So, even concerns about downside maybe continuing showing up in the skew. I don't. Did you see something similar, or is this why I shouldn't be talking about ags at all?
Let's get out there. Let's see what we're seeing out here, Mr. Rhoads out here, because it is a fascinating week. Like I said, 29% of the paper going up in that July contract, over 500,000 contracts right now. We'll hang our hat out there. What is the vol in corn, you might be asking? It's at about a little bit shy of 30, 29 and about 2/3, off about exactly 4 points this week. So again, we're talking about a 13 handle in VIX, listeners. So if you want more than 2x that vol, allow me to present Exhibit A, corn. I mean, that's still freaking me out that we are within a point of the 12 handle in VIX again. That's just great. We'll get to that maybe a little bit later with the once in future Dr. VIX here. In terms of skew, listen, what's the skew out there right now? In July corn, the puts last week were pretty bid, about almost 5% rich. This week, that bid has completely evaporated and swung the other way. They are now 2.3% cheap. So crushing that bid in the puts in July corn. Calls last week, kind of flat, about 1% bid. This week, kicking it into higher gear a little bit, nearly 3% bid this week. So kicking in a little bit of a bid to the calls, bit of a swing to the puts. So that's kind of intriguing out there. I do echo your sentiments of what you said earlier, Mr. Rhoads, talking to your students. When you're looking for skew, sometimes the equity market's kind of boring. The puts are bid, the calls are offered. Yeah, I get it. It's just a question of degree. You get out into the commodity space, you get into the metals, you get the ags, you get crypto, all these things. You got skew flying fast and furious in all directions. From a skew perspective, certainly a lot more fun to be had in the world of futures options these days than in a lot of the equity markets that we traditionally look at, outside of maybe your crazy popping meme stock and a few other things. Again, I said there's about a little over 500,000 contracts, 29% of that going up in the July contract. And the big dog this week out here in corn, listeners, looks like it's close to a tie, but we have a winner chicken dinner in the July 580 puts going up nearly 11,000 times this week. The big day for those was Monday, nearly 4,000 on Monday, 2,500 each yesterday and today, and about 2,000 on Tuesday. Opening every day except for Tuesday, slightly closing there. And then right behind that, listeners, if we go all the way out to Dees, where about 22% of the paper went up this week, it was the par calls, the 600 calls that were leading the dance with a little bit north of 10,000 contracts as well. So again, kind of a close fight for the top spot with, again, 10,100 contracts of these par calls. Also the big day for those Monday, nearly 4,000 on Monday, 2,800 today, and about 1,700 each Tuesday and Wednesday, opening all week long for those. We're kind of jumping around here. It's interesting because right behind that as well, we have to go back out to another July contract. And this one hanging out at the 520 puts that has about almost 10,000 contracts going up, about 9,800 as well there. And again, these are the 520 puts. So Monday, the big day for corn, obviously. 3,000 contracts on Monday, and then about 2,000 each Tuesday and Wednesday, and about 2,800 today. So kind of 10,000 is the magic number out here in corn. We're seeing that in a bunch of places. Let's go back to these other July contracts we were just talking about here. Let's see. Also, we had these 600 puts going up in July, 10,300 times. The big day for those. Again, Monday, 4,600 on Monday, 2,500 on Tuesday, 1,800 today, 1,300 on Wednesday. Again, back and forth, opening to closing all week long. So it's kind of been a lot of back and forth action out here in the ags. But intriguing stuff. I do kind of agree with you, Mr. Rhoads. It does seem like in the near term, we do see a little bit of a bid to the puts. That's kind of gone away, though. And then now go a little bit farther out here in the corn. And we're starting to see some interesting, especially if you go out to, let's say, the September and even August timeframe out there. You're seeing a surprising amount of bid to the calls and a discount to the puts. So it looks like a little bit longer term, we are seeing some upside being baked into the corn there, sir. So you're not entirely incorrect, sir, when it comes to the corn, sir. Your favorite new product.
Mm-hmm. Oh, yeah. I love corn. I used to seasonally trade it, but beyond that, not, I never done, again, not done anything in the, I'm giving myself all kinds of credibility here. Hadn't really traded the options before. I was kind of surprised if you had made me blindly guess what had happened to corn this week, I would assume that it would be up. Ukraine is a place that corn generally comes from. And I think this flooding that's going on there is going to have a negative impact on some of their agricultural production and getting whatever they grow out of the country as well. So if you had made me blindly guess, was corn up 10% or down over 10% in the past week, I would have guessed up.
Yeah, more of a bastion for wheat than for corn. But you're right. If you're taking out a lot of farmland with this flooding they have over there now, which that's what they needed. They needed someone to blow up a dam on top of everything else going on out there. You're right. Maybe in aggregate, you might expect just some of that windfall upside to carry over into corn. But not the case this week, listener. That's why we do the show at the end of the day, to parse the numbers. So are you intrigued? Have you dipped your toes into corn? I know back in the days of the SIBO diaspora, Mr. Rhoads, a lot of guys were leaving the SIBO. Equities were kind of dwindling. They were looking at other markets, early 2000s. A lot of them went out into corn, and they had a lot of success out there. It was a very tradable product even then. Remains a very tradable product right now. Clearly, just from the paper we're talking about, a lot of paper, a lot of skew, a lot of vol to be found, a lot of expirations. There's weeklies. So you could definitely do worse, listeners, than sinking your teeth into corn. I was hoping they would make it onto the show more often than it has of late, but a little bit of action in corn out here this week. I'm happy we were able to talk about it a little bit on the show. But Mr. Rhoads, I know you're champing at the bit to choose our next product. How dare I allow our listeners to choose, sir?
I want to talk about my namesake.
All right. Where do you want to go? So I'm guessing by you saying that, you want to go into lean hogs?
No, I want to. That's my middle name.
Oh,
Russell Lean Hogs Rhoads. Now, I want to take a look at the Russell 2000 because it appears there's something kind of funky in the option skew.
All right, there is funk to be found. So to the equities we go, listeners.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, go into that drop down, pop out of the old ags, go down about 3 slots to equity indexes. Then in the product family, click on US Index E-mini. And then normally we might hang out in the S&P or maybe the NASDAQ. Going to scoot down 3 slots to the Russell 2000 today. I haven't checked in with our old friend Small Caps in a while. And you know what, Mr. Rhoads? It's a good week to be doing it. When we used to talk about small caps on the show week after week, they would struggle to do 10, 15, maybe on a banger week, 20,000 contracts. Already this week, Mr. Rhoads, closing in on 50,000 contracts right now, 48,000 and change. So we have not seen that kind of paper in small caps out here on CME in quite some time. So clearly, sir, the game is afoot in small caps. What is catching your eye out here, sir?
I'm just taking a look at some of the short dated options, and the ones that go off the board tomorrow. They're got bid on the skew, a bid on the call side with the skew. Excuse me. Most active option is the at the money call, and same thing for the options that go off the board early next week. It just looks to me like there might be some call buying and as part of a fear of missing out trade is where I was going with that. We've seen that happen in the NASDAQ, and we've seen that happen in the Russell 2000 periodically when they're making a really nice move relative to the S&P 500. We saw it earlier this year in NASDAQ options. In fact, one of the things that kept NASDAQ volatility at a historically high premium relative to S&P 500 volatility was call buying. Kevin over at NASDAQ pointed that out. And the same thing has happened in the past when we've seen a strong Russell 2000 market. And we've just started to see the Russell 2000 kick into high gear relative to the other indexes over the past couple of weeks. And I think it shows up in some of the option information on the Quick Strike page.
It does. Let's break it down, listeners. Like I said, it's been a while since we chatted about these. It's been a while since we've seen this kind of paper, which is impressive. You know, you were talking about your namesake index on vol views last week, Mr. Rhoads. Since then, it had kind of given up the ghost a little bit earlier in the week. We were not seeing small caps participate along with the rally we saw in the larger indexes. Now we're starting to see that change coming into the start of the show, listeners. Like 1887, roughly up 52.3 handles just this week nearly 3%. So you think we're seeing that inflection point, Mr. Rhoads? You think we're seeing that moment where the worm has turned and small caps going to finally start playing catch up?
They've definitely been playing some catch up. I've started to worry that it's happened too quickly. I'm not one that takes many victory laps, but I had been out there saying that I felt like it was time for small caps to catch up with the S&P, and it has happened. But my outlook was that it would happen by the end of the year, not in 2 weeks. And it hasn't fully caught up in the last couple of weeks, but it's definitely outperformed by a certain amount. But a part of me is now wondering if we've come too far too quick. But also, the only major market that sell in May and go away phrase still works for is the Russell 2000. The summertime is usually a pretty difficult time for small caps. And that's actually one of the reasons I was like, I think the Russell 2000 might play some catch up, but I wanted to have something short against it. And that's why I combined a short S&P with a long Russell 2000 position. I took that thing off yesterday. So I'm kind of on the sidelines with respect to the rut. And I probably shouldn't have taken it off. Yes. Yeah. Well, I guess I am looking smart for the moment.
I'm looking terrible right now.
No, I'm looking okay. Whatever. This is a marathon, not a sprint. And that was supposed to be a marathon trade, not a sprint trade. And I'll probably get back into it if they widen out a little bit more.
That is.
If I'd shorted S&P and loaded up NASDAQ at the beginning of the year, I'd be in great shape.
You'd be doing all right now.
Yeah.
That is true. That is true, listeners. What are your thoughts? Listen, what are you shorting out there? Are you shorting small caps? In which case, you may be hurting this week. Like I said, the big dog, it's all usually in the 0 days, and if not there, in the weeklies for the equities these days, listeners. And that is the case out here in Russell 2000 as well. We go out to the June contract, has a whopping nearly 8 days to go. That's an eternity in equities these days. You might as well be talking into the far-flung, distant future. The 1940 calls, that's what's doing the dance out there this week. By the way, what is the vol right now in small caps? A little bit frothier than VIX, which, again, is to be expected. That's one of the reasons we talked about small caps so much on this show. Structurally, they are and should be more volatile than large caps, so they should be more interesting from that perspective. And it didn't really materialize for a while. Starting to materialize now. A 21 is the vol if you go out a little over a week in these small cap contracts, up about 1.5 points. So again, contrast that to a roughly 13.5 in VIX when we kicked off the show. And yeah, it's a stark contrast between small caps and large caps from a vol perspective. UIs last week, the puts were bid, 4.5% bid. This week, catching even more of a bid, 6% bid. Calls coming in 2.7% cheap last week, a 1.7% cheap this week. So losing a little bit of their discount as the puts are getting bid, which is kind of interesting. Usually, if we're rallying, you might see the calls go the other way, but we're not seeing that. Maybe because the biggest print out here was 2,237 of the 1940 calls. Most of that going up on Wednesday, nearly 1,600 on Wednesday. All of that opening. Another 650 today. It could be a bit of a roll. It looks like someone took off about 1,000 of the. I just lost. There we go. Someone took off about 1,000 of the 1,900 calls on Wednesday as well, and then maybe put on 1,600 of the 19. That could be, in which case, looking at what we call in the network listeners a bit of a house money roll. And if small caps are popping, they were long those. They probably would have a little bit extra house money burning a hole in their pocket, in which case maybe they come in and do about 1.5x of the 1940s. We also saw about 650 of the 1940s going up today versus 400 of the 1900s going up today. So it is possible it is unrelated paper, but one leg is clearly closing. One leg is clearly opening. We are threatening to break through that 1900 strike. So it does make some sense. Someone might be rolling and looking to keep that party alive, not just taking their money off the table. The number 2 most active contract, actually, I take it back. I buried the lead, listeners. The biggest trade out here is actually not those 1940 calls. You have to go a little bit farther out. I'm not used to even scrolling beyond a week in the equities anymore, listeners. So sometimes it's easy to miss the longer term paper. And in this case, it was the June, man, all the way. These are end of month June. So 22 days to go. It was the 1775 puts, Mr. Rhoads, that were leading the dance. My goodness, I did not have that on my bingo card this week. Nearly 3,000, 2,787 going up this week. Pretty much all of that on Tuesday, all of that opening. So somebody opening for size on the 1775 puts on Tuesday this week. Worth noting, someone took off, looks like about 700 of the 17 quarter puts on that same day. So maybe a bit of a 1x4 pretty much roll. That could be. We've seen funkier things. It is interesting that most of that paper going up on Tuesday and not much the rest of the week. But yeah, nearly 3,000 of the 1775 puts also going up this week out here. It's just kind of an intriguing stuff across the board. And as Mr. Rhoads pointed out, not to be forgotten, the 0-day or more accurately 1-day contracts also lighting it up this week, in particular the pars, the 1900s. This is kind of what I expected. Pretty much near at the money, slightly out of the money, 0-day now calls going up 1,300 times, 500 today, 500 yesterday, a couple hundred on Tuesday. Pretty active, mostly opening all week long. Those seem like they're on pace to do all right. But then again, if we hang out here by tomorrow, they're going to be probably sad campers. If past is prologue, they're probably buying those all week long, looking for a little bit of a momentum-based pop here in small caps. And so far, at least, they've gotten it. So intriguing stuff. Yeah, this paper all over the place out here, listeners. The 1,700 puts in September going up nearly 1,000 times this week. 500 on Wednesday, 250 on Tuesday, a few more scattered throughout the week, opening all week long. So funky paper across the board. I guess that's why we do the show, Mr. Rhoads. We can uncover this stuff. Did you have
makes you go looking for it?
Yeah. Did you have nearly 3,000 of the June 1775 puts in your bingo card for this week, sir, in small caps?
No, I did
not.
No, I wonder if that's a hedge that they were rolling up that hasn't paid off quite yet. But they're running out of time on that protection paying off for them if that's what they're doing with that trade. And the reason I kind of throw that one out there is when I see activity in the month end, as you did note that these are the ones that expire on the last day of June, which also could be when you say the last day of June, I think quarter end, having been in a business where I was judged from quarter to quarter for several years. Which makes me, when I see something like that, I think it's probably a hedge because it's matching up with a reporting period as well. But they're really looking for a bad June. Maybe they agree with me on the seasonality around small caps, and they feel like that's going to add fuel to the fire to the downside and maybe either protect some profits or give them a nice speculative bearish trade to show as look at how smart we are in the second quarter of 2023.
Yes, June always an interesting time in small caps as well because Recon pretty much happening in June.
Oh, yeah.
Well. That always shakes up. That's kind of the big event on the calendar year for the Russell folks out there. So that's always a big shakeup. Intriguing data coming out of that. We'll have to sink our teeth into that and see if any interesting trends have been illuminated by that. Speaking of illumination, we are coming up against it, but your email, your questions, your feedback, always illuminating to us listeners. So let's get out of here on a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment. You know how to get at us by now. We're available just about everywhere under the sun. You want to be most of the major social media platforms. Just look for Ad Options. That'll be us. If you want to go questions at theoptionsinsider.com, the old email route that works. Members, of course, you can use your members hotline. If you're listening live, you can send those questions in as well. No shortage of ways to get your feedback on the show. If you follow us at Options, you can also play along in our questions of the week. Last week, let's pay off this one really quickly. It touches ever so briefly on what we're just talking about, which is indexes. We asked you last week, many of your favorite names are trading at or near 52-week lows from a vol perspective. We gave you 4 choices. Which of these would you rather buy 1 month volatility in right now, aka buy some 1 month options, listeners? Apple, Microsoft, Tesla, or for the purposes of this show, the S&P 500. And Tesla took it nearly 39%, followed by the S&P in the number 2 spot, 32.7%, 18.4% for Microsoft, and then only 10% for Apple. I thought Apple would do a little bit better, but a lot of love for the S&P 500 in that, given the fact that vol is so cheap, it's intriguing, but it has been moving a little bit of late. So, and vol continues to collapse. So if you got long vol, it's been a challenging trade for you, at least over the last week and change. Speaking of the S&P, Mr. Rowe, let's get out to this week's question of the week, which I want to pick your brain on. It's that time of the year. We mentioned it's June, it's recon. It's also, we like to gauge our audience's sentiment at certain points of the year, beginning of the year, middle of the year, and end of the year. Coming into the middle of the year, so we thought we'd ask you, we've seen a lot of green on the screen this year, but we've also seen aggressive bursts of selling that can turn things red quickly. Quite simply, will the S&P 500, I don't care what your flavor is, you go the E-mini, you go the SPX, you go SPY, whatever pick your poison out there. Will the S&P 500, will it close positive on the year? Heck yes, or heck no. Mr. Rhoads, what is your answer? I have a feeling I know which way you're going, but what is your answer? And then B, what do you think our audience is putting down?
I'm going to say, well, I'm heck yes. I feel like the worst is behind us. And you know, I've been on enough lately that that's been my common theme for a while now. So that's why, that's how I would guess that. I am going to say a coin toss between up and down, 50-50. There's something very close to that.
You are one of our Puma Bulls in residence these days, Mr. Rhoads. And you're right. Our audience was close to 50-50. It's starting to spread out a little bit more in your direction now in the last day or so of the poll. It's at 57.9% right now for heck yes and 42.1% for heck no. Listeners, make your voice heard. You got about a day left listening on the podcast. You will have some time. If you agree, disagree, get in there, make your voice heard. We will reveal the final results. Probably on Monday's show because no live shows tomorrow. But Mr. Rhoads, we got an intriguing question here coming in I wanted to get to from A. Dante. A. Dante wants to know. He says, hello. Very interesting program. Well, exclamation point. Well, thank you. A. Dante, we appreciate you taking the time to listen and to write in. He says, I noticed that ProShares is reverse splitting many of their ETFs, including UVXY, 10 for 1. Oh, yes, infamous. Maybe we'll discuss that on a future Bob. Touched on it a little bit already on the option block. We've been waiting for that moment out there. But also Boyle. They also run Boyle. He says, I know you guys discussed UVXY on volatility views, but what about Boyle? That's reverse splitting 20 for 1, and that is their natural gas ETF. Are you fans? And what impact will this reverse split have on the trading of it? Does it make it more viable? We haven't really talked about Boyle a lot on the network or even on this show. I think I got into a little bit with the Rock Lobster on Options Oddities, one of our pro shows a few months back. But that's really one of the few appearances I can think of. If you're not familiar with this one, listeners, this is, as you mentioned, the ProShares Ultra Bloomberg Natural Gas ETF. Say that 5 times fast. Worth noting, it is a levered ETF, so it's 2x the daily performance of the Bloomberg Natural Gas Sub-Index. So that's an index of the natural gas futures. Again, it's an index of the future, so it's not going to track these things one-to-one. It's also a levered 2x product, so bear that in mind. This is not one of those kind of buy and hold, set it and forget it products. They even mention it in the prospectus. If you're going to trade this thing, got to be on top of it. It's going to be a very short-term type of trade because these levered things reset all the time, and you never know what impact that's going to have on the long-term performance. Trading right now, $2.70. But if you dial that way back machine back to, the heady days of exactly a year ago when we were talking about 9, 10 plus calls going up in nat gas a year ago, Boyle was trading at $123. So what a journey from $123 down to $2.70 right now. So this thing has fallen off a cliff, which, again, makes sense. This is a levered 2x. So nat gas has mostly been trending lower for the better part of the last 6 to 8 months. And this thing's going to get hit even more aggressively as a result. So this thing has just lost pretty much all its value. Hence the 20 to 1, even more than UVXY, 20 for 1 reverse split that is going up in good old Boyle. Mr. Rhoads, we'll save your thoughts on UVXY for another appearance down the road. As our listener, A. Dante, wants to know, are you intrigued by Boyle? Have you ever traded it? Do you have any thoughts on it in general? And then B, specifically this 20-for-1 reverse split going up, does that make you more excited?
It makes me very excited because I can go back in and buy way out of the money long dated puts.
Yes, exactly.
Sit around it, much like I bought. Do you remember last year when I was on this program and I said when it was at 110 that I was buying the 10 strike puts?
Did you say that? I don't recall that. Did you?
No, I'm just making that.
Oh, I was about to say. Well, the dinner's on you the next time I see you, sir. I thought you were going to say like the 70 or something crazy.
I couldn't help myself on that one, but gosh knows I wish I had. I've been trying to read up on this index and seeing if there's any sort of drag associated with the holding the futures, because it says just on the fact sheet, it says it is not intended to track the performance of spot price of natural gas, with not underlined. It says it all over the place on here. So I assume in addition to natural gas being down, that there are probably some structural issues that provide a drag on this thing as well. Just because, year to date, it's down 50% or so. And it's actually down about 80% this year. Goodness gracious. Well. So I feel like there's got to be some structural issues along with this one as well. But the whole blowing up the skirt and everything, we're talking about trading options here. And it's very difficult to trade options on something that's trading at $2. So getting the price, personally, I wish they had done a 20. If I were going to trade it, I would, if this were a market that I was heavily interested in, I'd send them a mean email and say, why 20 for one? Why not 30 or 40 for one?
I had that same argument with UVXY. They're only doing 10 for one, but that's another show entirely. But they're going to be reverse splitting that again in like 6 months, if less. But I 20 for one is the minimum I would do here. I would want a lot more. But you're right. This is one I'm not as familiar with either. It's not like a lot of the vol ETPs we talk about where there's a natural contango built into the term structure. So there's a natural drag built into all these daily rebalancing ETPs. It's a little bit different here. The nat gas term structure a little bit different. It has more seasonality baked into it. So you're right. I need to do a little bit more digging. The long-term chart says, hey, long-term put, set it and forget it, right? But I need to do a little bit more digging on this one. I would still, if I had to go one way, I probably would be leaning that way. So a reverse split does set that trade up again nicely. That's, of course, preventing another crazy, invasion in Ukraine or something else that sets the nat gas market into a tizzy and boils back up at 123 again. But it is intriguing. It's a good question, A. Dante. I have a feeling this is one I'm Mr. Rhoads is going to, you gave us some homework. This is a good one. Mr. Rhoads is going to sink his teeth into this one. I'm going to sink my teeth into a little bit more. And when it's hanging out at $2, I didn't really have a lot of incentive because no one was really asking about it. Maybe this reverse split doing its job. Clearly you're asking about it. I'm assuming others will be interested in it. And when it's trading at a little bit more manageable level, north of 40, then it might be an intriguing one to sink my teeth into again. I want to get a better sense for the daily performance. I want to get a better sense for, as Mr. Rhoads put it, the drag on this thing when it exists, how it's impacted by the term structure. And then from there, it might be in a more credible trading vehicle. I have to pull up the ADV. I haven't checked it out what the options ADV is. That'll obviously be an issue as well in terms of liquidity. But an intriguing one, a great question. And maybe for a lot of you out there, we talk about nat gas all the time. There aren't many good trading vehicles outside of the ones we talk about here, the direct futures and options, which I know are still intimidating for a lot of you. Also, they don't have really weeklies on the options yet. So you got to kind of bite off a whole monthly contract. For a lot of you, that might be a little bit too much. I'm not saying Boyle is the alternative, but it's one to investigate. And we're definitely going to have it on our radar, A. Dante. I think we'll come back to it on a future episode. All right, everybody. That music means we have run out of time here on the show. But if you're listening live, stay tuned. Might be a little fun bonus for you folks. Mr. Rhoads and I might do a early little taste of vol views for you, because we're not going to be live on the network tomorrow. For the rest of you on the on-demand feed, maybe we'll cut something fun together for you, so you're not left holding the bag on vol views. I am called away, but you know what? Doesn't mean you folks are going to miss out on your content. But before we go, Mr. Rhoads, if folks are intrigued, they want to check out what all of your musings might be. Could be in vol, could be in corn, could be in nat gas. Where should they go? What should they do, sir?
I keep writing things up on a Substack. It's just if you Google my name and Substack, you'll come across it. Anything that I ever do, and sometimes I tweet it correctly and sometimes I don't, but I always tweet out what I'm up to. As you noted, I put the wrong link to your website when I tweeted. I was so excited to be called into Volumes last week that I put the wrong URL in my tweet. But normally I'm pretty accurate with my tweeting.
Normally he is quite accurate. Check out all of his aforementioned tweeting at Russell, 2 S's, 2 L's, RHOADS, all one word, over there on the old Twitter. That'll have links to his Substack and everything else. He's been doing some interesting updates on his longer-term VIX upside trade that was prompted by a question from some of our listeners out there. So intriguing stuff. By the way, I just pulled it up for you folks who are intrigued. Boyle has an ADV of 40,000 contracts, listeners. So Boyle, nothing to sneeze at from a volume perspective. So if you're worried about a little bit of a roach motel, you get in, but you can't get out because there's no liquidity. At least from that perspective, you could do worse than 40,000. Even Bitto, which had a great ADV, has kind of fallen down below that now, around 33,000. So Boyle putting up more contracts right now a day than Bitto, which is intriguing in and of itself. Speaking of intriguing, if you want to intrigue yourself further with some great reports on all these products we talked about, or maybe some we didn't have a chance to get to today, or we didn't have a chance to get into the dairy today, or some of the other fun stuff that was lighting it up out there. And Mr. Rhoads, he has in his rider, he has no lean hogs ever when he's on the show. So we had to avoid that today. If you want to check out all that fun for yourselves, maybe the 30-year, maybe Bitcoin, cmegroup.com/TWIFO, TWIFO is the place to go. We're going to get on out of here. For all you listening live, stay tuned. Mr. Rhoads and I might do a little quick fun hit for Vol Views. For all you on-demand folks, pay attention to your network feed tomorrow. Maybe some fun stuff coming for you there. And we're back again on Monday with our usual array of programming all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.